Hello everyone, welcome to today's US Open live session. It is Friday, February the 16th, 10 minutes before Wall Street opens as every day. I am your host Nikos Zabouras, Senior Financial Editorial Writer at FXCM. As of course the week comes to a close, activity has been a little bit subdued following the important releases of the previous few days that we have already talked about, but we see some movement on the greenback, finding renewed strength at this hour after the strong and better than expected producer price index report. And today we're gonna focus on the Euro USD as always, and the NASDAQ 100 as always. But we're also going to talk about the UK100, the UK index, which posts a relief rally as markets digest a slew of data from the old Albion that we saw this week. And next week has quite a few important earnings releases from the US mainly, and we're going to talk a little bit about Nvidia, the company that has enabled the AI revolution that is responsible for last year's stock rally, and of course electric vehicle startup Rivian. Before, however, we begin, as always, please read carefully through the risk warnings and the disclaimers, and then we will go ahead with our analysis. Okay, let's get the ball rolling. Let's get right to it. We're gonna start with the euro dollar, which found reprieve earlier in the week, but now faces renewed pressure from the PPI data. And we're going to talk a little bit more about them when we talk about US equities. US demand had cooled off amid some poor data from the US retail sales and industrial production, and of course, the fact that many ECB officials call for cautious stance on rates. This is what helped this recovery, brief recovery, and limited from this highlighted support region. This gives the common currency the opportunity to reclaim the 200 period EMA, the black line that you see on the chart, but it definitely does not inspire confidence for greater gains that could potentially challenge the next resistance at 1.1017. The Fed is taking its time on lowering rates, and market come to grips with this narrative, but the rebound is limited at this stage, and bears remain in control with the ability to push towards 1.0610, the 76.4% Fibonacci, but further losses have a higher degree of difficulty. As we have said, there is opposing competing factors now in play, because the monetary policy is murky at this stage, the policy differential and the policy dynamics. Now, let's now talk a little bit about the UK index, the UK100, or the FTSE 100 if you prefer. The index made a bad start to the week following wage growth persistence, but things changed with a CPI report from the UK. We talked about it. Just as a reminder, there was stickiness on the year-over-year figures, which you see on the upper part of the chart, but month-over-month inflation decelerated sharply, contracted by 0.6%, and that's what market focused on. It was the fastest decline in a year. This spurred a relief rally on the index. Let's go back to the UK100, which carries on over the last couple of days as well. Despite the contraction of the UK economy, second straight quarter of contraction, which is the technical definition of a recession. And the reason why markets still were okay with that is because how it reflects to monetary policy actually strengthened the case for the Bank of England to cut rates. It is now within striking distance of its December highs, 7,795, but further gains could prove elusive. And if we look at the relative strength index, you can see that it is in overbought territory above the 70 line. The Bank of England has not really embraced lower rates and has called for sustained restrictive stance. It has more work to do on inflation, which is still way above the 2% target and shows stickiness, while the economic contraction narrative can't really provide much of a positive narrative. And along with the RSI that we said, we could see a return below the 200 period EMA, the black line around 7,615, although new 2024 lows at 7,423 would definitely need a much stronger catalyst. With 2 minutes ahead of the US session, let's talk a little bit about the Nasdaq. Not much new. We've been covering the index every day. The strong CPI report earlier in the week pushed it lower, but the pair has managed to regain its composure and seems poised to tackle to set new record highs and tackles the 18,264 resistance. However, today's PPI figures, which also came in hotter than expected, similar to the consumer price index, put some renewed pressure on the Nasdaq 100. Markets repriced their aggressive bets for a Fed pivot, so there is definitely scope for a new pullback towards the 200 period DMA, but strong catalyst would be required for a bigger correction that would pose the bullish momentum. And now let's talk about some key earnings that we expect next week from the US. We will focus on Nvidia. Nvidia is the leader and enabler of the generative AI revolution, artificial intelligence revolution, since its GPUs are the ones that power the development of applications like ChatGPT and large language models. Nvidia already reaps the benefits with its financials and its stock soaring. And let's delve into the financial a little bit more, and you can see on this graph how its top and bottom lines have progressed. In the last quarter, net income grew by more than 1,200% year over year, and revenues more than tripled. And you can see this meteoric rise over the past year. Executives expect sales to grow further in the soon-to-be reported quarter, which is on Wednesday after market close, both for Nvidia and Rivian, that we're going to talk about next. Of course, that puts a high bar there. The stock index has also benefited. It recently passed Amazon's market cap, while if we see at last year's performance, we have shown this graph again, you can see that it had gains of nearly 250%, easily outpacing the rest of the Magnificent Seven. The reason behind it is demand for its AI infrastructure. Now, of course, there is expectations for Nvidia to keep delivering, but that sets a high bar which could leave room for disappointment. And there are also concerns around the chips restrictions towards China imposed by the US government, and the progress of other companies on the AI front like AMD. Nvidia's near monopoly won't last forever. Now, in terms of technical analysis, there's not much that can be said. The stock extends its gains this year with around 25% gains. There is definitely scope for a pullback, but it's hard to envision a very big drop unless there is some continued disappointment around its prospects. And now let's move to Rivian, the EV startup, which had a